Today I have the 3 best support and resistance signals for you, and if you're able to trade those signals, you'll be able to trade all support and resistance scenarios. First, let's talk about the support and resistance breakout flip. Very common, very important. We're starting here on the higher time frame. This is the daily time frame, and you can see the market has been in a steady downtrend. During a downtrend, it's quite normal to see corrective periods where the market is not advancing on the trend but moving sideways, such as it did here. We are having the breakout here, and we will talk about breakout support resistance trading in later parts of this video. But what we focus on now is how the market responds to this support level. Very often you will see that support becomes resistance. We've all heard this phrase, and it's very, very common in trading. I will show you how this works on a lower time frame. What we want to do on the daily time frame still is we want to wait for the market to get back to this support level, and we want to observe the price action here. You can see just a few candles later the market has moved higher. We reached the daily support level, which now might become resistance. We want to focus a little bit closer on the recent candlestick pattern that is showing here. This is what we call an evening star pattern. It's one of the most important patterns in candlestick trading. It's a 3-candle price pattern. We have a strong bullish candle, then a neutral candle, and then a strong bearish candle. This is often a sign of a reversal, especially if it happens at the right location and the right context. The context, if we remember, is the long-term downtrend. We're looking for short opportunities in a long-term downtrend, which is a great trading strategy. What we do now is after we see the evening star pattern on the daily time frame, we go to a lower time frame. For example, we can go to the 1-hour time frame, and here's where we start looking for trading plans, and we want to create trading plans. What do we see on the 1-hour time frame? We see that the market made this double top, which is the result from the daily evening star pattern. This is the strong bullish candle, this is the neutral candle, and then here we are seeing the strong bearish candle, which is now broken down into a microstructure on the 1 hour. We also want to mark previous highs and lows on our price chart. So here we have marked a previous low, which the market has already broken. Here is a current very important support and resistance level. Here is resistance, and it's becoming support on the lower time frame. We want to make sure that we are breaking this level as well on the lower time frame. This happened shortly after. We can see that the market after the double top now is also making a lower high, which is very important. We have to break out through a short-term lower time frame resistance and support level, and this is a great entry now. Our stop loss could be placed above the recent swing high here, and then because we are going with the higher time frame momentum, we could extend our target and shoot for longer targets and higher reward to risk ratios because we're going with the trend. And you can see afterwards the market really unfolded here into this downtrend. The price fell off and sold off rapidly. This is a perfect example of why trading with the long-term trend often gives you much better trading scenarios. Now let's take a look at the support resistance breakout continuation. Here we are looking at a scenario on the higher time frame, and we are on the daily time frame. We have marked this very important resistance level, right? Here we have twice resistance that sold off and led to a long-term downtrend. The market then over a few months came back into the resistance level, and what I do in my trading is I always mark those very important levels on my price charts on the higher time frame, and then when I do my weekly analysis and I see that the market has come back to such a level, I will start observing this price action very, very closely. What is always important to look for is how the market is trading into the level. So what is the recent price structure and trend structure? Here we can see that the market continuously made higher lows, which is a very important signal because it shows us that we are in an uptrending market. Now we have a strong breakout candle. Ideally, you always want to look for strong breakout candles with your entries and as a confirmation. From the daily time frame, we don't jump on the trade just yet. We want to time our entry on the lower time frame because this will help us get a much higher reward to risk ratio. So now with this candle, the breakout, we go to the lower time frame. We go from the daily to the 1 hour to observe the price action and see what is happening. This is the level that we have drawn on the daily time frame, and this is the breakout candle that we have seen. You don't want to chase such markets. You want to wait for a much better opportunity to get a better price. In an uptrending market, if you want to look for long trades, what is a better price? A lower price, obviously. So what we do is we wait a little bit longer, and you can see the market shortly after moved back into this level that we drew. It's very similar to the previous example that I've shown you with the support and resistance flip on the higher time frame. Now with this approach, it's a little bit more aggressive. Here we go to the lower time frame a little bit earlier, and we look for signs that the market is slowing down at this resistance area, which now might become support. And what we see is a clear sign of the market slowing down. We have a strong breakout candle here and a strong breakout sequence. Then we have a strong sell-off here back into the resistance level, which is now becoming support. And then as soon as the market hits the support resistance zone, the market is slowing down. We get inside candles, we have momentum dying down, and the market is not able to push through this level. This is a very important signal. And as soon as the market then breaks out of this range, this is then often used as an entry signal for breakout and continuation traders. Some traders may choose to wait for the market to clear the highs all the way. This is a little bit more of a conservative approach. However, if you're looking for more of an aggressive early entry, high reward to risk ratio approach, then getting into the trade as soon as the market clears the range here that we're seeing around the support and resistance area might also be a possibility. And then you can see afterwards, this is what happened. This is the retest area that we have observed after the market broke out. The market came back to the area. We had the momentum dying down. The market traded sideways. We had the breakout of the zone, the retest, and then the market shot higher. First, the market pulled into the previous high that we've seen after the breakout. After a little bit of a sideways, we had another continuation breakout scenario. And you can see a very similar picture. When the market hits the previous resistance area, now as support, you can see the market is slowing down. The momentum is dying down, just like what we have seen here. And then on the breakout to the upside, we see the next continuation. So you can see this natural rhythm of the market is often repeating itself across the time frames. And finally, we're looking at a support and resistance fakeout. Not all the breakouts are going to succeed, and it's very important that you also know how to trade fakeouts. So what we're seeing here is a classic breakout as example, and we're starting on a daily time frame. Once again, we have a resistance area and the market is now breaking out. Shortly after, the market is back at the previous resistance area and it might turn into support, and then the market is going higher. We don't know at this point in time whether this resistance level is now going to hold as support and whether the market will trade higher from this. There's no way of knowing in advance whether the market will go up or down. We can only trade the probabilities, and what we can only do is go to the lower time frame and look for those micro clues. So now let's see what we can find on the 1 hour. After the breakout, the market sold off and traded back into this level. Here now you can see that the market didn't really stop at the support and resistance zone that we drew on the daily time frame, right? So here the market is already pushing a little bit stronger through the level. This is not enough to finally say that this is turning into a fake out, but we have to closely observe and see what the market is going to do. And then we get this shortly after, and this is a clear sign that the market is showing more strength to the downside. What we are seeing after the sell-off, the market put in this consolidation. Obviously, on the last example that I've shown you here, when the market moved into the support and resistance, we also saw a consolidation. What is the difference here? We have a very narrow, very well-defined consolidation, and the market broke out to the upside. In this example, what we see is the market breaks down to the downside. This is a very, very different signal. And you can also see that the market is here trading already below the support and resistance zone that I've drawn. So in this example, we see that we have this pressure pattern, a significantly lower high. We have a very strong support level that is now being broken. And at that point, I would very confidently say that the chances for a breakout, meaning the market is not going to reverse higher and continue on this support and resistance breakout, but it is much more likely that the market is going to sell off, is a lot higher. And then you can see this is what happens. This is where the breakout happened. Then we have a push to the downside in an impulsive wave. We have another consolidation, push to the downside, and another impulsive wave. And here we can clearly see that this is a very different scenario than the previous example where the resistance turned into support. So going on the lower time frames and looking for those micro clues, looking for those break-off structures, seeing how the market reacts after it's trading into support and resistance, the momentum that you are seeing on the lower time frames, and then finally waiting for breakouts can really save you a lot of money once you understand what is a breakout and what is more looking like a fake out.